All right, Brenda, I'm excited to dive in. Why don't we kick off this conversation with talking about your background? So, you're now leading this team at Tellor. What were you doing prior, and how did you get into crypto and the world that you're in now?
My background is in economics, and I actually worked for the U.S. government for 13 years. I used to do more like I would develop and let teams to develop statistical software for some of the principal economic indicators, and also I did some methodology research for them. And while I was there, I met Nick, one of my co-founders, Nick Fett, and we actually published a paper together, and we went our separate ways. And um, and he was great to work with because I used to manage the team, and he was the one person I never had to visit. Like I knew he whatever he had, it was done. Like he was so reliable, and he's also super smart, so I never worried. And then that was like in 2015, and we went our separate ways. In 2017, he quits the government. He used to work for the CFTC, regulating cryptocurrencies, and he starts his first startup. And then I'm starting to look into it, and I contact him. We go to basically dinner, but I was more of a like I just wanted to like pick his brain and maybe like invest on something and then move on, right? Maybe buy something of whatever he was selling and support him. And as we talked, it just turned into more of a conversation of like, just wait, basically. And then literally the next month, he got funding from the Ethereum Foundation, and he called me and he's like, "Quit your job and join me."
Whoa.
And I was like, I don't know.
So, what was the pitch? What exactly was he trying to do at the
Oh,
time?
so it was a derivatives protocol. So the very first startup eventually was called Daxia, and it was a derivatives protocol for pretty much, any asset on chain on Ethereum. And that's, I liked Ethereum, so that's what I was interested in. And he called me, he asked me to join him, and I literally thought about it for like 3 days. I know, 13 years, a career and everything. And I'm like, yes, I'll take it.
Yeah.
So I did go back and I stayed a little bit longer with the government, like about a month and a half, to make sure I would transition everything cleanly and train people. And then I started learning solidity. So I would go to work, get home, and I would do like the zombies tutorial, the Ethernet. So all my afternoons, I had like 3 hours of just like coding in solidity. Because I used to code in like SAS and R, but I never, like, solidity is so young and early. So at that time in 2018, I was just like, okay, I guess I'll just learn a new language, you do that. And then while I was transitioning, so then I left, finally left my job, jumped into the first startup, Daxia. And then, like most startups, we were very flexible. I mean, we knew we wanted to do something with Ethereum, and our main goal was actually building something that was very decentralized. And with Daxia, the problem that we had was that our data feed was oracleized, and that's now provable, and that's very centralized. And Chainlink didn't really exist; they didn't have anything on mainnet at the time either. So we launched like in I want to say like in July or June, July, and then in August, in June, July, at the end of July, there was a hackathon here in DC, and over the hackathon, we actually built Tellor. It was supposed to be like something for our data feed that we wanted it just to be more decentralized than what we had.
Got it. So what was the central? So I walk me through a little bit more of what the problem was with Doxia.
Oh yeah.
Yeah, in layman's
So
terms.
yeah. Yeah, so let me backtrack a little bit. So derivatives are basically in, they don't call them bets, but they're basically bets. You're betting on whether the price of an asset is going to increase, and we call that being long. And if you're betting the price of an asset is going to decrease, we call it being short, or taking the short position. And you have a starting point and an end point. And from the starting point, if it goes up, then you win that bet. You bet that it was going to go up. From the starting point to the end point, if it goes up, then whoever was long wins the bet and takes the money. If it goes down, whoever was short takes the bet and takes the money. So for that to work, you need a starting price and an end price. And those two prices need to be very secure, because most people are going to want to game the system if their losses are greater than attacking, that point of centralization, which provides the data point for the price that they are going to be evaluated on. So that is super important for derivatives protocols. Even now, derivatives protocols, stable coins, and pretty much most of DeFi, to be honest. Securing that price is, incredibly hard too, because if you want to do it in a decentralized way, because you need to have the right incentives, and you want to make sure that, it's open, trustless, but it can also protect the assets that you are making these bets on.
And is there an inherently difficult part of that, technically, just to have it be open and trustless, or did it have a vulnerability to that idea?
Yeah, so it's well, at the time, and even now, I think it's really hard, because, for example, if it's just open, you have to build incentives. And what we did is we built an economic incentive for people to, one, want to provide the data and want to behave in the right way. So anybody that wants to provide data, they have to basically put up a bond. And if they provide bad data, that bond can be taken. And anybody can actually, for a fee, can go and dispute their data, the validity of the data. And then it goes to a vote of everybody that holds our token. And if they're found guilty, I guess, their stake goes to the person that initiated the dispute. Otherwise, the fee goes to the person that provided the bad data, to make up for the time that they were not able to provide data and earn rewards.
And this happened? I mean, you did. Was there a lot of votes, and was the system?
Yeah. So our system has been up since 2019. We were just talking about it today. Since then, we've had 78 disputes, mostly because of software issues, more than having a malicious party. It was more like somebody was testing something, and then they pushed to mainnet, and they were like, "Oh, I didn't change that," and we're like, "Well, it's about data." So we have had that. We have done votes on it. For those votes, I don't think there's a threshold. We have thresholds for voting on forks, or when we upgrade the system. For that, it used to be 10%, now it's 5%. When we have met and exceeded our 10% threshold. So now it's 5%, but it's, we have.
What is 5%? Sorry. 5% of the...
Oh, the quorum that has to be reached of the supply.
Oh,
the quorum
I see.
That has to be
of voters?
Reached of the supply of voters for a fork to go through.
Got it. And has that happened? A fork?
Yeah. We upgrade. Well, we call it a fork, but it's just basically we upgrade the system. We have the way that Tellor is designed is we have basically our storage contracts, and then we have our logic contracts, and those logic contracts can be updated. So we have done, and we call those a fork, but it's the logic contract generally stays the same, and then we upgrade. But we did do a fork also. A full fork earlier this year or last year. It seems like forever.
Yeah,
Sorry.
yeah.
So everything happened so fast.
I bet that was
earlier this year.
I bet that was a big deal. So when you worked at Daxia for a year or so. Also, if you want to just close the notification on Discord, if you have that ability, that'd be great. If when you do the switch from Daxia to Tellor, was that an obvious decision at the time, or do you feel like it came out of a hackathon? Usually hackathons, you kind of go in there with fresh ideas, and it's a total pivot if it does work. How did you start Tellor, or decide to shut down Daxia?
So basically, we ran out of money, right? Mm-hmm. Like a lot of startups do. We ran out of money, but what we were, because we did have, so Ethereum, the foundation, they gave us a grant to actually do bridge research. And that's very similar to oracles, because basically you're just bridging data, but instead of from chain to chain, you're doing it from off chain to chain. And so we had done some research on that. And when we started looking into it, we did have enough to we worked enough on it we worked with the hackathon. We didn't win the hackathon, but then we continued to work on it because it was going to be for us to use. So we continued to work on it from July through December. And then we had a much better system. And then around January, February, when we were running out of money, we were due to run out of money in April, or actually end of March. We pitched it to Binance, and they liked our idea.
You pitched the idea of Tellor to Binance? And
yeah.
What was the potential deal? Was it they were going to acquire Tellor, or they would give you a grant or invest in the company itself, or?
No, they invested in us.
Uh-huh.
They invested in us. I can't disclose the deal, but they
Sure.
did invest in us.
Sure.
And they basically made us a part. They invested in several companies at that time. It's a branch of Binance. It's Binance Labs. And they invested in about 13 companies that year. And they put us in different chapters. We were in Berlin. Some people were in San Francisco, and other people were in Lagos. And then at the end of it, we all met in San Francisco. So it was an 11-week journey. And then by the end of the 11-week, we were working on the demos, and we were working on finalizing the design. And then the 11 weeks ended in the early July. And then we actually launched to mainnet in August of 2019. Yeah.
Awesome. Yeah, that's an exciting time period. So 2019 was a bearish year, right? Crypto was down.
Yeah. 2018 too.
Yeah.
2018 was not great.
Yeah,
either.
no, I remember vividly.
Yeah.
So how was that program? So I imagine it's kind of like a typical accelerator program where they give you under 100K and they're taking some percentage of the corporation, and then they're helping you with the goal of raising money afterwards, kind of like Techstars employs this model and Y Combinator, but Binance will focus on crypto companies, obviously, with the intention of, do they look at it as trying to aim at traditional investors, or like an ICO and crypto investors, or some combination of both? Or
To be honest, I don't know.
Mm-hmm.
They didn't require us to have a token. They didn't require us not to have a token. Honestly, it felt like, to be fair, because we were building on Ethereum, we were not even building on Binance
Mm-hmm.
chain, and we haven't really gone over there because we don't have users there. We don't have the user demand yet, so we're not there yet. I honestly think at the time it was like a consensus thing. You know how consensus just invested in a bunch of different smaller companies, and then just to kind of build the ecosystem. Mm-hmm. Because when we were very honest. We're building on Ethereum. That's where DeFi is. That's where we're building our Oracle. And they still invested in us. I honestly don't know what their end game was. I don't really know what it is today.
Yeah.
But I know that it really helped us finalize and develop, kick off Tellor.
Yeah. Cool. Yeah. Sometimes I don't think especially when companies or foundations have a ton of money, they just want to get things going, figure out how are we going to screen companies? What's the accelerator going to look like? What's the investment vehicle going to be, whether it's a grant or owning a piece of the company or ICO. And I think I'm also a big advocate of this belief is just start, just do something. So if they deploy $1 million over, 5 companies, well, yeah, it costs $1 million, but if you're Binance and you have, a 300 million, whatever their, purse is, it's like you have to use it somehow. I think just keeping capital sitting dormant is not nearly as productive as putting it in the ecosystem. So I would imagine, I mean, that's my, sidebar, or that's my armchair belief on it. But I remember I did talk to them when I was running a crypto company, which we ended up selling, but we talked to them in 2019, and it felt like an early program. I mean, Binance is just such an awesome company, and how many different products they run between the labs and all the different trading tools they have on their site. Yeah. It's wild. So, so where are you guys now in terms of the number of people working on the product, or how you measure?
So at the
progress?
beginning, let me tell you, it was really hard because it was like, so there's 3 founders, Nick, Mike, and myself. And Nick and I have very similar backgrounds in economics. We went to the same master's program. Like, we have very similar backgrounds. We both program. And then Mike is more like, he actually translates what we say into digestible content. He's like, he does magic, to be honest. And at the beginning, it was just, it was also super easy to collaborate because we do everything on GitHub, open source. But if, I would spend a week doing some coding, and then Nick would spend a week on the same repo, and we would just switch weeks and switch repos. Right now, and we did that up until last year in August 2020. That's when we hired our first developer, and it was amazing. I was like, what am I gonna do? I'm not gonna have work to do. We have one more person. I'm kidding.
Oh, I was gonna say.
But no, absolutely not. There's so much work. But that was the first time that we hired somebody last August, and then but it was super exciting. And we had done some contracting work. That's how we had like managed a lot of like the workload, because it was a lot.
Yeah.
I can tell you, all of us, we worked like from 6 to 5, and then got back on the computer at like 9 to 11. So we started hiring in August, then we continued hiring in September. October, we hired another 3 people. And then that's what we ran with up until the next year. This year, 2021. And then in June, July, we ended up hiring the rest of the team. And now we're 13.
Gotcha.
13, there's 1 in Belgium. So
All
there's
remote?
13 of us. So our office is based very close to here, to DC in Frederick, and is usually about 4 or 5 of us that go to the office. So I go to the office once a week just because I'm farther down, but whenever I can, I go a little bit more often. But I'm a little bit farther, and everybody else is remote. We have people from California to Florida. So we have everything in between, and then we have a person in Belgium. And like one of the employees, I think he went for a little bit to visit his dad in Germany. Somebody else is going to go to Paris to live there for a little bit, or to just explore it.
Yeah.
So it's it's pretty open in that regard, but we still have a lot of work. Like, we're still hiring. So if there's any devs out there, any Solidity devs, please.
Yeah, totally. I love it. And you're so primarily U.S.
That's where we're at right now.
Funding now from the Ethereum?
Oh, yeah.
So the funding is primarily from Binance or from the Ethereum?
We ended up... Yeah. No, primarily from Binance. No, Ethereum, the grant was over. And then from Binance, we actually also ran out of money. We launched to mainnet. Apparently we're not very good at raising money. I don't know. Some people are very good at it. But anyway,
It sounds like you're good at raising
we
money
do
and
have a
spending
token,
it.
right? But like it got us enough to where we got into in our own 2 feet. And honestly, I feel like it's even better that we didn't raise for like from a bunch of different entities, because it is hard to have a bunch of investors. I mean, maybe somebody else has a different perspective on that, but I feel like it would be really hard to have a bunch of investors looking over our shoulder. Binance is really good at, trying to support us and just letting us sort of grow on our own. But they do provide a lot of, like, if we ask, they'll come and like talk to us and try and give us advice, especially like our original advisors. But aside from that, I feel like it was actually kind of a blessing, because like by the time we were running out of money again, our token actually started like sort of being worth something that we could just pay the 3 founders from. And then from there, it was just, it just kept growing a little bit and a little bit. And then, it was like $5 and we were super excited. We were ecstatic about it. and then,
Yeah.
and then it was like, and then I think it went up to 8 and then it crashed back to 5. And, but for us, it was just like amazing. Like we can do payroll, imagine everything that we're going to be building. And that was then. And we were very, very I feel like we were very optimistic. I've always been very optimistic. I'm like, it's going to work.
Yeah.
And but even, I feel like every time we said, next month we might have to get jobs, everybody.
Yeah.
Or the 3 of us. The 3 of us is everybody. And then we would just be okay. And then we hit a point where we're actually okay now, where we feel like more established. We're really growing. So we went from Tellor to right now we are running on Tellor 3, what we call Tellor 3. And it just made it a little bit faster. Now we've been working like basically all summer. We've been working on Tellor X, which is going to make it even faster. And that it's going to be up for a vote in about 2 weeks. So we're going to be rallying up everybody to make sure that we get that quorum in and that we're able to pass the upgrade. We're also implementing a lot more fun things like a treasury. And, because currently we really just run on, we run on a dev share, that we have a dev share model. And what we're trying to move into is to eventually completely decentralize Tellor. And, we've seen MakerDAO, we've seen other entities like moving into that direction. And we eventually want to be so decentralized that we are really paid by our holders, and that our value, the value that we bring value, and that, our holders are able to see it and sustain the company in the long term.
I love it.
Hopefully, I feel like the dream is to become like, see Vitalik giving you customer service for Ethereum.
Yeah, no, it's much more decentralized.
At some point you just move into a different role.
Yeah, and it's amazing that the kind of evolution that we almost take for granted now, which is moving from the centralized to decentralized model, and using the token as the business model. If you don't mind closing out Discord on your computer, if you're able to, just to kill the notifications, would be great, if that's possible.
Have it on.
And then I want to ask you about that. So, well, okay, maybe it could be on my side. I'm not entirely sure. But I want to ask you. So you created a token, and the tokens economics are separate from the company.
Not really. No, the token.
All right. So when you issue tokens, this is something I wanted to ask you about. Mm-hmm. So you have the ledger, you have what you're actually building, and then you have the tokens that are separate from that. I want to ask you 2 things. First is, how do they connect? Like you're creating this token system, and the tokens don't own the company. Have you thought about where it is now and where it will be, with how the token system and the actual product that you're building connect? Or Can you explain more about how that works? Because you mentioned earlier you guys were paying yourself from the price of the token.
From a dev share.
Dev
So
share.
the way
Okay.
that it works, yeah, from a dev share. The way that it works is that every time currently, when you submit as a reporter, you stake a bond, and then you every time you submit a value, you're paid inflationary rewards. Of those inflationary rewards that are created when that reward is paid, we get 10%. So as it means that the reward, and 10% of that reward comes to us, and it goes to a multi-sig wallet for the team, and that's what funds the team. So we'll sell a little bit every month to do payroll.
I see.
We try not to, because it's also our voting power. So it's we try to sell the minimum amount that we possibly can, because that's because we run on a 10% dev share, and we sell for actually sustaining the company, and we have like quorums to meet when we want to do updates and stuff. We always have to rally up people to come and vote, because we don't have all of the 10%
Yeah.
basically with us. But we try to minimize it, because we want to have some sort of voting power when these things come up. Obviously, we would love. I mean, it's only 5%. We really do not hold the majority of the supply. We clearly don't. So we could totally be, overthrown by
What
the holders.
happens?
But you know what? It
Yeah.
would be it that. Hey, that's what crypto brings, is the freedom to actually go with what you believe it's supposed to be the right thing to do, or the right path for the company. If they want to fork it, I guess they would fork, and we would have to do, maybe we'll continue with the fork, or maybe we just, follow the holders. But it's I think it's a risk that everybody runs with crypto, if you think about it. It's just a matter of how much or how well you're able to build a community that really believes in the values that you believe in. And if you're able to do that, then you shouldn't really be too scared about it. And also, if our goal, Nick, me, Mike, is to actually become more decentralized, that means that, it should be the holders, it should be this community that we build that takes over the system, and hopefully they hold similar values to us and are able to grow it in the same direction that we originally wanted to.
Yeah.
Because
How does it work technically with say the fork? So you have GitHub, things are public on GitHub, so the repository is hosted on GitHub. The fork, or the contribution to the main code base that you would make, the decision of whether or not to push that is made on chain. Is there a connection? But I mean, can you hypothetically, if the voters voted to not update some software update that you guys are working on, are you technically able to still make that even if voters voted against it, or no? How does that technically work?
So we don't have an admin key. So if we're not able to pass it, we basically have to get up our marketing hats and explain to people why it's technically a better option to upgrade. And I think this one shouldn't be too horrible, because it's gonna be faster. There's probably gonna be some people, maybe the miners, because we're moving from proof of work to proof of stake, basically. Or it wasn't really proof of work. It was a stake, proof of work merged with a bond and proof of work in the past, and now it's just going to be basically staking. So there are going to be people that are going to be against it, maybe, but it's also cheaper to stake, and you don't have to run a server, so maybe they won't be opposed to it. But it just works like that. You just have to. On our end, we think we're doing what's best for the protocol. We are the ones actively working on it, and we're telling the community, like, this is what we're moving into. We put out a white paper a few months back. They know what we're doing. They know what we've been up to and building. We have a community call every Tuesday, Anybody's welcome to come and ask us questions live. And that's basically, if it doesn't work, then we did something wrong. Then we didn't do our job to really educate the community as to why that's a better option.
Right.
Or we have to go back to our drawing board and look at it and say like, okay, can we come up with a better option?
Right.
That, and eventually, like, honestly, like that's just how it works. Currently what we've done is we've thrown our key away. And we've implemented something that's actually pretty cool and pretty new. And it was more of a compromise, I think, because we do want to decentralize, but like I always get very stressed about it.
Yeah, understandably.
So because we did a fork, this is the second time that we actually throw our admin key. And so the first time around, we just threw the admin key, and then we had to fork the second time. And then we had to fork because we didn't have an admin key, like a full fork. And then this time around, it's usually, me and Nick. So I'm stressed and like he wants to throw the key away. And I'm like, no, let's wait a little bit longer. Let's like wait just a little bit longer, make sure that nothing happens and nothing breaks. And he came up with this really cool concept of the parachute. It's like, okay, the only way that we're able to like basically upgrade the contract quickly is if there's a hack where somebody like mints themselves a bunch of tokens, or if we find out about it, then we would exploit it and it will get the key back. But other than that, it's like that or mining completely breaks.
Yeah.
Or data providers. I'm trying my best to not say mining, because it's not going to be mining after Tellor X. But if that completely breaks, then we can take the key away back again. And the way that we know that it broke is basically no mining has been done in a week. Like it's completely broken for some odd reason.
Yeah. So, how many, there's so many things I want to ask you to clarify.
Yeah.
I'm curious how many miners there are. I'm curious how you decided to go from proof of work to proof of stake and what the implications are. And not to throw three things on you, but I'm also curious, what does this look like when you're successful? Like what where do you hope to be in 5 years? What does Tellor look like? But let me do it one at a time. So how big is the mining community out there?
So we started, we kicked off on August of 2019. We were able to, we thought it was going to be really hard to grow a mining community. And so at the beginning, we were literally like giving away tokens. And then by November, we were no longer able to mine our own coin. People jumped on it. And then by December, I'd say by March, we had most of the big pools already in. So then nobody can really mine anymore except for the big pools. And I think with them, I think it's about 30 miners now because they're so centralized. And any proof of work becomes very centralized eventually because all the big players have the big equipment. At the beginning, our reasoning for using proof of work, it was that it works to distribute your coin in a decentralized way. It worked. We know how to reach consensus for the blockchain. We can use the same model and apply it to reaching consensus on what's the right or the truth of a number, what's the true number of something. And so we applied basically the same concepts that we do the same with Ethereum into our own Oracle. We know it works, and we thought it would be a really great way to do a distribution, basically. And anybody could be part of it. Anybody could mine. At the beginning, you could do it with your computer. It was super cheap because our token was very cheap. So anybody that believed in the project and started mining, then we had a fairly good distribution. That's why, we don't even hold, I think at this point we hold about 5% of the 10% of the dev share, because we obviously had to pay payroll and survive at the beginning when it wasn't worth much. So, but our gain now, or our reasoning for now transitioning, is that it's fairly centralized anyway by now. And, we try to do it as centralized as we could at the beginning. And we're also letting Ethereum sort of like do all the testing for us, you know?
Yeah.
Okay, so staking seems to be working. Staking is not as new as it was back then. And we're like, okay, I feel like we're more, we feel better about actually using this technology now than we did 2 years ago.
Yeah.
So, you know, I think, and at the point that we're at, as decentralized as the proof of work is, we think it's just a fair thing to do. And with that, we're also decreasing the bond that they have to put on, and we're hoping to actually incentivize more people to become miners, because now you don't need hardware, you just need, you know, 100 tokens. It's going from 500 TRB to 100 TRB in Tellor X. So that was our reasoning for that. And then I forgot your next question.
Oh, I was curious, what does this look like? What does this look like 5 years from now if everything goes perfectly well? Is it, you know, the mission of the company is to create this derivative product, or this ability for people to use derivatives? Is that?
Well, it's actually, with Tellor X, it's we moved from just providing number data to providing bytes data. So any question can be asked to Tellor, string, number, you name it, whatever it is that your heart desires, Tellor's gonna be able to handle. As a user, you still have to define it. You still have to say, like, this is what I want, and how to decode the byte data. And, you know, because random people are going to be providing this data, and you want it to be as clear as possible as what they should be providing. So it's not just to provide data for derivatives. Initially, that was our impetus, because that was our original startup, and that's what we thought we just needed it for us. Now that we're at this point, it's different. Now we just want to be able to provide, we're part of the infrastructure of blockchains. We're not really, you know, because for them to run and really, like, I feel, run interesting products or create interesting things on chain, they need data from other chains. They need data from the internet. In order for them to actually scale, I think this is just an integral part of the infrastructure. And that's something that we didn't realize when we started with Daxia, that the infrastructure was still, you know, under construction. And now we became part of under construction. And so in 5 years, what I would think, hopefully within the next 2 or so, as people start to figure out how to move into more of a DAO structure, that the team starts to get actually smaller and smaller, until it becomes like basically the community supporting the system. The community supports the system, and then the actual holders vote on basically how much either the smaller team gets paid, and, you know, how much they get paid, whatever. The community actually determines that, and then it truly becomes decentralized that way.
That's
so
awesome.
Within 5 years, I want to make sure, I hope that we figure out, or somebody that's a bigger player figures out how to go from a corporation to a full DAO, and how to do, you know, payroll and healthcare, and be able to take care of the people that help you build this up as much as you can within, you know, within the constraints of trying to become decentralized. Because, you know, you also, all of our employees are great, and I want them to actually, you know, be okay even through the transition. So we're really closely watching what's going on with Wyoming. We're really closely watching what's going on in with MakerDAO, and just trying to learn from them, and trying to do it, you know, hopefully in the best way that we can for everybody to be happy.
Yeah, it's such a unique,
you know,
thing. To, you know, most of history, corporations just grow, and the success is measured by how much they grow. And now there's like a new economic model using tokens and the blockchain that make it so you want to decentralize yourself effectively out of a company. From an economics perspective, I'll loop in this part of your mind. So you thought a lot about, you studied economics, you worked in government, where you're working on programs related to economics and statistics. What did you learn from that experience? What level of economics did you study? You know, being like macroeconomics is what the entire world is doing, and try to understand patterns, to, you know, really low-level economics and understanding data on certain commodities markets or something. Where were you on that level? Like, how do you sort of think about it?
So I studied macroeconomics. That's my, I'm guessing that's my main. Within the government, I used to work for the Producer Price Index and the current employment statistics. Those are also macro numbers, but they do have different industries. They're broken down by industries, and then you have to learn more of the microeconomics of the industries to be able to, follow their dynamics and do like different stuff. What I've learned from it, I mean, you can do research on any data, but what I've learned from it basically is that any data is gonna, if you mine it long enough, it's gonna give you whatever you want. I feel that with the government, they do try to be as transparent as possible. So when they put out numbers, they have like whole sections of methodology and why they chose to do, for example, for the oracles. There's a lot of stable coins. There's a lot of derivatives out there that, they're trying to settle within seconds, and they're using like a spot price. That's like, what? That's like super vulnerable. And that's such an old problem for, it's a traditional problem that we have traditional ways of, solving it or dealing with it. And then in this new industry, people are seeing it as a new problem, where it's like, no, like what I've learned in my experience is like, even though we have a new way of doing things, we can take a lot from what actually has been done before. One of the main things is there's a difference between an Oracle provider. We're an Oracle, we're decentralized. That infrastructure and that architecture is completely different than what a customer defines as the data that they want. If a customer comes to me and tells me, Brenda, I want the spot price of Bitcoin from X API, I'm going to try to tell him like, well, maybe a spot price is not the best thing. Maybe you should use a median. Maybe you should use volume weighted average. Maybe you should use, other stuff or try and mitigate the risk. But ultimately, the users know their customers. For our users, our companies, but they know their customers. They know what they need for their protocol. Ultimately, my opinion is my opinion. I hope that, they take it. But if they don't, I hope that eventually they learn like how imperative it is for them to actually define the data that they need. Also, in a way that it mitigates the risk of being attacked. Yeah. So use more than one source. Maybe use a peer-to-peer network. Maybe use different things. And for us, for Tellor, eventually a peer-to-peer network is on our site, but that's after Tellor X. Yeah. Down the road. After Tellor X, after integrations, we have a lot of work to do with Tellor X, with moving to other chains, just because we have customers there. Mm-hmm. Polygon is probably one of the ones that we do first. We prioritize by users, but then we have, we really want to go into like trying to figure out how we would do this how we can collect data in a way that is truly unstoppable, and that's hard.
Yeah,
that's really
very
hard.
So very hard.
But that's, that we have a lot of things in our plate. But what we've learned so far is that, if we wanted to recreate the traditional system, there's much cheaper systems. There's much easier ways to do it than any blockchain, to be honest. So looking at what we have now, and everybody that's coming in, and knowing that everybody's very new to some of the people are very new to even the industry, like finance. I just hope that everybody takes a look back at the traditional system and at least says like, let's not make that mistake, or let's really take the good lessons from it and push them this way. Yeah. And then just, start off from there rather than try and reinvent the wheel. Yeah.
And it's such a balance too of knowing what patterns are on the, that you can make the same mistake with, and then trying to be innovative enough to break through those and find new problems in the world. But yeah, Brenda, congrats on all the progress. Sounds like an awesome project at Tellor, and you guys have certainly been through a lot to get to where you are. So yeah, congrats on everything, and hope you have you back on one day. I really enjoyed the conversation.
Thank you. Thank you for having me. This has been great. Yeah, thanks for inviting me.
All right. Bye-bye.